Thank you very much, Chairman. I was so pleased that you introduced me, because those of you in the room who don't know me might have thought, given the two flags that are behind me, that I had changed job. And given that the flags are not there as far as I'm concerned, I'm going to add one question to the list of questions that were mentioned. And I'm just going to ask whether the world has gone French. Now, if you remember, when the US government stepped in to save Fannie and Freddie in early September, there was one Republican senator who woke up in the morning and made a statement. He said, and I quote, "I thought I woke up in France." A few months later, an American editorialist titled his article, I quote again, "How we became the United States of France." Then this past March, and this is something that I'm happy to share with you, although it was mentioned and quoted in the Financial Times, a very eminent British politician, Lord Mandelson, who is Britain's business secretary, praised France's economic model, even asserting, and I quote again, "We have something to learn from continental practice," which is part of Europe. You know, the rest of Europe is the UK. Now, one thing that the Financial Times did not mention is that he came to visit me, and we spent a lot of time talking about tax credit on research and development, about clusters and the policy that we're putting in place to encourage companies to invest in research and development and to really sustain the innovation pattern. And as he walked out of my office down the stairs, he had to go through this hall, which has the either the statutes or paintings or photos of French ministers of economy and finance since many, 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 many years ago. And he just paused and looked at this beautiful statue of Colbert, who was the Minister of Economy of Louis XIV. And he looked at Colbert's top and he said, in my old days, I might become a neo-Colbertist. Interesting. So has the world gone French? In the last several months, government intervention in the economy has been massive. And if you look at the World Economic Outlook that is published by the IMF, you will see that measured by IMF standards, and might come back to that in a minute if you have any interest, in 2009 and forecasted for 2010, the stimulus packages put together by countries that are determined to increase, boost and restore growth amounts to pretty much 2% of GDP on a global basis. As far as France is concerned, we've invested in a stimulus package over 2009-2010, over 50 billion euros, which is pretty much 2.4% of GDP. And by definition, those stimulus packages that we are investing in the economy, that was a European commitment that we made, are triple T. They are temporary, they're targeted, and they're timely. And all three T's matter, especially in the context of sustained and solid public finances that we will have to restore, as we all know, after the crisis is gone and growth has been restored. Those stimulus packages clearly are important, and for those that are worried about public intervention, try to remember the quote by President Roosevelt, who during his campaign denouncing what the prior administration had done, or rather had not done, he said that the nation had been, and I quote again, afflicted with hear nothing, see nothing, do nothing government. That might remind you of the Chinese monkey. Yeah. Well, confronted with a crisis of equal magnitude, I would say, certainly we cannot afford to repeat the same mistake. And around the world, governments have heard the complaints, they've seen the issues, and they certainly are doing what is possible to do in order to stem the crisis. The coordinated plans to stimulate the world economy provide ample proof of that. Now, what is unprecedented today is clearly the consensus that we have to, in addition to stimulate the economy, which was clearly shared by all those participating in the G20 meeting in London under the excellent chairmanship of the Prime Minister, Gordon Brown, and prior to that prepared by Alistair Darling, my colleague, Chancellor of the Exchequer. The consensus is that we cannot just do that and we also need to overall finance industry regulation. Now, you might all think, okay, here is France, here is continental Europe, all they want to do is regulate. Not to the point. What we absolutely have to do is that we put in place better, more comprehensive regulation so that what has happened and what has actually caused the crisis to happen does not happen again. And certainly that was the determination of the G20 in London. Now, some of you again might argue that the G20 is irrelevant and the only thing that matters is actually the G7. Those who think that are clearly making a mistake and are not seeing that the map of the world has changed, that the map of the economic powers has changed, and that clearly the determination is not going to be the same ever again. Not to say that the G7 is gone and story of the past, not to say that it becomes irrelevant, but simply to underline the fact that the world is different and that economic powers such as India, such as Brazil, such as China have a say, have a seat, and certainly have something to do about restoring confidence and stimulating growth, and certainly also about stabilizing the system. This is exactly what we agreed to do. And it's not a surprise that as part of the communiqué you find one sentence which is, the two sentences that are critical. The whole communiqué matters and a lot of the requirements, a lot of the suggestions are critical. But the two sentences that in my view matter a lot. The first one is the one that tries to diagnose what happened, and it says the following. It says major failures in the financial sector and in financial regulations are described as fundamental causes of the crisis. The second sentence, I'll come to it in a minute. And subsequent to that, the G20 decided not only to put regulation as the sort of second key objective after stimulating the economy and restoring growth, but it adds to it not something which is an attachment, but something which is a statement by the G20 leaders, which includes 6 pages of recommendations, guidance, and the things that need to be done to restore a stable financial system. Now, there is certainly, back to my question, a bit of a French touch about some of the communiqué. I would say about the G20 itself, and it's not so much a French touch, but it was a European touch. And I was personally party to that meeting that took place in Camp David, when President Sarkozy, as President of Europe at the time, convinced President George W. Bush that we had to have a G20 meeting and that that meeting should take place sooner rather than later, hence the meeting that took place in Washington in November. Now, I would also suggest that there was a bit of a French touch when we very strongly insisted on the second sentence, which in my view in the communiqué is also very important, and it says the following: all financial markets, products and participants should be regulated or subject to oversight. And it is our strong belief that we can only efficiently and in a sustainable fashion restore growth if it goes hand in hand with the restoration and restabilization of the financial system as well. I don't like to quote too many people, and I have already, but frankly, on this occasion it won't be a quote, but it will be sort of a borrowing from someone that you all know. But never in such a short period of time, so much wealth has been destroyed to the detriment of so many. And I was going to add by so few, but that remains to be seen. And I don't think that we can allow a return to just business as usual. Let's forget about the crisis, put everything under the carpet, and go back to old practices. To give you a bit of background, I certainly, together with my German colleagues, worked hard on building some of those proposals. Together with my UK colleague and the three of us, we worked very hard so that at the European Council that took place just before April the 2nd meeting, there was sufficient strong consensus to push for certain changes that actually were underlined at the G20 meeting. And let me come back to that now, those new regulations, and that comes to the question that you asked. There's no doubt that business and capital, money, will move around, has probably never moved around as fast as it did, as fast as it does, and as fast as it will. It should stay that way, and it will be that way because technology supports it. But there is a consensus on the fact that there should be greater and, more importantly, better regulation to deal with the crisis and to deal with the post-crisis. And I hope that Lord Turner will address those issues. I'm sure that he will, because he's volunteered some terrific proposals to that end. But if we do that on a regional basis within Europe, for instance, or on a national basis in the UK or in Germany or in France or in the US or in Japan, it won't be enough, because we will produce a fragmented system that will again entice players, because it's their natural tendency to arbitrage between various forums and to do forum shopping. So if we were to do that, in my view, the cure would be just worse than the disease, and it would certainly endanger the likelihood of a restabilization of financial system and restoration of growth. So what has the G20 done? It has very wisely called for an international regulatory roadmap to precisely address that risk. The approach agreed is, in my view, both realistic and cooperative. And the G20 has agreed to rely on international bodies in charge of international cooperation and in charge of standard setting. Who are they? Well, clearly the newly expanded Financial Stability Board. Remember, it used to be the Financial Stability Forum, the FSF. It's no longer the FSF, it's the FSB, and the fact that it is a board is probably not irrelevant and clearly indicates and signals that there is empowerment underway. The good thing about it is that it is enlarged, and I'll come back to that a bit later on. What other bodies are going to be in charge of really providing that international roadmap and the various signals and the various gateways that are necessary along the way? Clearly the Basel Committee, IOSCO as well, and all of those will have to make sure that implementation of the decisions are on our agenda. Why should that be? Because we simply cannot afford the risk of fragmentation, because we will reopen the nice road to arbitrage, forum shopping, that will be detrimental to proper and stable financial system. Okay, let me now sort of go down to a bit more details concerning how comprehensive the regulation should be. Don't forget the sentence: all territories, all institutions, all bodies. Needless to say, all products should be either regulated or supervised, and possibly both, if their scope, their magnitude, their size gives them a systemic importance. So the regulation must be comprehensive. Let me move to territories first. One of the most mediatized aspect of this G20, because it was sort of the last inning, if you want, was the issue of territories and the issue of non-cooperative centers, also called tax havens. In the G20, we succeeded through protracted negotiations at the end in having the OECD publish a list of the non-cooperative centers, non-cooperative jurisdictions. What was the immediate effect of that? Well, in a matter of days after that, those countries, because the listing of the OECD provides 3 categories of countries: the white ones, you know, the sort of clean and above board; the grey ones that need to deliver, that need to, you know, demonstrate that they are actually responding to the expectations of the international community; and the black ones that completely ignore the rules and that never supply information when any country in the world has tax suspicions that one of their taxpayer is actually evading and frauding the national tax system to which he or she or it is subject. So don't get me wrong on this issue of the non-cooperative centers. I'm not challenging the authority and the right of any sovereign state to lower, higher, or keep its taxation system as it wish. That's an attribute of sovereignty. But what we were challenging, and what we are challenging and will continue to challenge, is the ability that certain states have afforded themselves to simply say, no, we will not provide information when there is a legitimate suspicion by another state that there is actual fraud. So what happened? Those countries that were in the blacklist under the OECD ranking declared immediately that they were going to actually go by the rule and comply with the criteria set by the Global Forum of the OECD, which deals with those tax issues, and as a result would commit to sign at least 12 agreements with other countries to deliver information if and when required. Now that in and of itself is a pretty good result, and to me that is the beginning of the end of bank secrecy. Much more needs to be done. It was a big blow because the list was out. That's not the only list. We also need the list of those countries that actually protect money laundering, and we need a list of those countries that do not comply with prudential standards. Nobody ever can support money laundering. Nobody can be in favor of tax evaders. Nobody can be in favor of those terrorists that actually get their funding through those channels. So more needs to be done in that field. More needs to be done as well concerning the enforcement, because it's all very well having those lists and those in grey, but we would certainly hope that those in the grey list would move to the white list. And clearly we want the FSB to continue to play a role in that regard. And we want the GAFI, I forgot what the initials are in English, but anyway, it's this organization that checks the money laundering schemes and that identifies those countries that do not comply with the rules. So we want them to come up with the list. We have the OECD, we want the FSB, and we want GAFI to also provide the same tools. And that's not enough, because we also need to define what sanctions and what will be the toolbox of governments to actually go about those that do not want to comply. So much for territories. Second, as I said, all institutions. Now, all institutions, I'll take two examples. Number one, the hedge funds. Number two, the rating agencies. On the hedge funds, some of the experts, particularly in this country, have said to me, well, why bother about the hedge funds? Because they have not created the crisis after all. Which is true. But equally, the hedge funds total about $1.2 trillion in asset under management at the moment. And they clearly use the banking channels for their operations. Now that governments are called upon supporting the banks, we must make sure that tomorrow those banks will not be undermined by entities that are amongst their most important clients, about which we have zero information. So, to that end, the G20 has advocated that members adopt a regulatory framework that requires hedge funds to register, to increase their transparency, and to explain how they invest, while also monitoring bank exposure to hedge funds. And we've tasked the FSB, it's clearly on the to-do list of them, we've tasked the FSB and the IMF to come up with criteria in order to define what is a hedge fund of systemic importance, or when does a hedge fund becomes of systemic importance, so that we have that level of clarity, transparency and expectations. I think we also made, and by the way, there is currently a proposed regulation at the European level, which has not yet been put to Parliament, but the draft of which certainly I'm not happy with, because I don't think that it actually responds to the requirements of transparency, control and appropriate supervision for hedge fund that becomes of systemic importance. The second area which I want also to touch on as far as institutions are concerned are the rating agencies. Again, the G20 communiqué calls upon more principles, better supervised. More principles, that means registration of rating agencies, the avoidance of conflict of interest embedded in the articles and actually enforced by the rating agencies, the compliance with the International Code of Practice, and a differentiation between the rating of, say, states, structured products, or bonds, because we simply cannot mix them all together. And if we expect them, and we need them, if we expect them to provide appropriate ranking, then we need that level of distinction. Moving on to my third example of how regulation needs to be comprehensive, I'll say a few words about individuals. As much as rating agencies mattered, and many others, I believe, in sort of either generating or encouraging and accelerating the crisis, I think that the compensation schemes that have been put in place and that were the pleasure of many for many years have to be restructured. And I'm not here saying that people should necessarily make less money. What I'm saying here is that the compensation systems to be put in place must take into account the passing of time, and that we cannot have traders, for instance, grab nice annual bonuses, sometimes guaranteed bonuses, quite often actually, without completion of the transactions and without making sure that there is a clear link between performance and compensation. The G20 has set clear guidelines to that effect, and certainly, for instance, my country, I've asked the Bankers Association to come up with sound principles that would determine better compensation systems not likely to induce the behaviors that actually encourage the crisis. Now, to do that, clearly we need players, because there's no project without budget, there is no completion without champions, and the champions, I think we have them available. Those are international organizations that clearly need to be empowered and that have been enlarged. There's been a lot of discussion about the too big to fail. There's been a lot of discussions about the too big to manage, and clearly there is a big discussion, and there should be, about the too big to supervise. And that's where clearly supervision needs to be, number one, very close to the ground so that it is efficient, and that pleads for national implementation, but it needs to be extremely well coordinated with some degree of close coordination to the point where it can actually signal an arbitrage when there are issues between national supervisors, and that is clearly something that the Financial Stability Board must be involved with. The G20 has also emphasized the need to strengthen our international financial institutions, to begin with the IMF. The IMF, as you remember, has benefited from a tripling of its resources. It's important. Why is it? Those of you will remember that 2 years ago we were wondering whether the IMF should continue lending, simply because most of the loans had been reimbursed. So why should the IMF carry on do that? Well, if you look at how much the IMF is lending at the moment, and if you look at the list of beneficiaries, we were plain wrong 2 years ago. The amount lent is significant, will grow, and the beneficiaries do not include just least developed countries, sub-Saharan African countries, but many countries in many different places around the world. And it will be so simply because some countries have public finances and balances of payments that absolutely need the support of an international financial institution. In addition to that, we are tasking the IMF to actually identify risk and to monitor. So to that end, it's not unfair that the IMF be not only endowed with a lot more money, and I was happy enough to sort of lighten myself with 15 billion euros that were sorry, $15 billion makes a difference actually at the moment. $15 billion, that was the French contribution, part of the European contribution to the fund. But it's also important that that body be more representative and better representative of its constituency. And its constituency, as you know, is large. It doesn't include Cuba, but pretty much everybody else on the planet. And clearly there are players that need to have a better, stronger and bigger representation. I'm sure that will be the case for long debates in the weeks and months to come, but it shouldn't come too late. Now, I regard both, by the way, I also mentioned earlier on that the FSB, not only is it tasked with many other things to do, but it is also enlarged. And all representatives of the G20 and Spain are now member of the FSB, which is a good thing. So we have those two institutions, the FSB and the IMF, both with good representation, one of them endowed with massive budget to actually support countries that are suffering, and the two of them cooperating in order to set standards on the one hand and make sure that it's implemented on the other hand. Now, final point, which is certainly dear to my heart and on which I think we still have a lot to do, is on the accounting standards. It may sound technical, and I will not go into too many details. Suffice to say that, and without questioning the fair value principle, mark-to-market and all the rest of it, certainly the International Accounting Standard Board has a lot of homework to do, and has a lot of homework to do in the short term as well as in the long term, to make sure that we can actually agree on consistent, comprehensive standards that apply across the board, so that we can actually compare carrots and cabbage with cabbage, and not the other way around, or mixing the two, which would make a nice soup but a complete mess in my view. So we will certainly pursue that. I'm pleased to say that the Europeans are very much together on that page, and that we certainly want the FASB and the IASB to work much more closely together, and to have at least the same level of efficiency, to say the least. There are a few things that absolutely need to be done. One is the issue of assessing the value of assets in a market that doesn't exist, where the mark-to-market principle simply cannot work. And second, there is the issue of dynamic provisioning, which has been adopted by some countries, such as Spain, for instance, and which actually works, which allows a bank to actually build reserves during good times, so that in down times it has sufficient cushion. This is really what I wanted to say, Mr. Chairman, and to sort of come back to my neo-Colbertism as prescribed by my friend Lord Mendelssohn. I would suggest that I don't think that the world has become French. Neither would I want you to think that the French are dead against free market, dead against liberalism, and dead against the principle advocated by Milton Friedman. Quite to the contrary, France is definitely a free market economy, one that is certainly more open than many economies around the world, if I judge by the number of foreign direct investors, and certainly one where there has been a lot less of the industry and a lot less of the economy that is under national control than in many other places, including possibly in this beautiful country that I love so much. So I would suggest that actually what has happened is that Mr. Colbert, the Minister of Economy and Finance of Louis XIV, who himself was a strong advocate of building and manufacture and supporting the economy and actually building champions, I think that Mr. Colbert has actually come to the rescue of Milton Friedman, so that we can actually make sure that this free market economy survives, but that it has proper principles and proper rules that are necessary for all players to have a chance to succeed. Thank you very much.
Thank you very much, Minister. Thank you for those remarks. I'm conscious we've got a certain amount of time, and I know you don't have a lot of time, and also we will want to get on to the next panel. So what I'd like to do is to take some questions, perhaps group them, if that's all right, around the floor. I think if we go one-on-one, if you don't mind, we're going to end up with a long conversation and find it difficult to be able to get as much in as we can. You've laid out a very strategic perspective, and if I may say so, you focused on what was maybe the second issue, the financial regulation, making sure these mistakes don't happen again. And clearly from the presentation you've given, the French government's given a huge amount of thought to the ability to make the most out of a bad crisis, I suppose, and put in place some changes that will have long-term impact. I presume the bulk of the questions will focus on that. If they do, I've got a couple of extra things I'd like to throw in at the end. But let me please invite you. I'm going to look at really literally the first four hands I see, and get some questions in from the floor, and then what I'll do is give you a chance to reply, and as I said, maybe throw a question of mine in as well very quickly. I can see one question at the front. There are microphones coming, and if you could just say what your name is, who you work for, so the Minister is well apprised of that.
My name is Lindsay Case, and I'm a Chatham House member, so that's my main focus. And the question is primarily, we're on a frontier, as you said, where money's moving so globally fast. And is the modern future so convergent to where, like in the Wikipedia model, all those puzzles are coming together? At what point are we talking about pretty much universal globalized flow, monitoring, I mean, is that the level playing field you're referring to? In a sense, I'm trying to see what 20 years, 2020 looks like, or 2050.
Might we have a global regulator, I think was one of the big questions that's come up here. I can see a question at the table there. If you can see, please go back on this side of the room. Go back, keep going, keep going, keep going. There's a man. If you please keep your hand up, please, man. Thank you.
Good morning. Thank you. Jennifer Harris, U.S. Department of State. I'd be curious to hear your thoughts on whether the G20 is an appropriate vehicle to address global imbalances and how much just fundamental imbalances between probably, if we're honest, what is the G2 more than the G20 ramifies into the broader kind of financial regulation concerns and yeah, again, so if the G20 is an appropriate vehicle there.
Right, so the global imbalance question. I have a question right at the front here. If you could bring a microphone down here, please. Just while the microphone is coming, something that was noticed is when President Obama said that we can't rely on the US consumer for being the consumer of last resort in the future, and in that sense the imbalance is obviously a big question for the future. Yeah.
Minister Jim Walsh with Prisma Capital Partners is a fund of hedge funds. As we approach the issue of regulation and repairing, are we likely to spend enough time to sort out what were systemic problems and what were people just not following the rules that already were in place?
I think with those three questions, losing on time, if you don't mind, we'll stop with those from the floor. If I could just ask you one question about taking stock about where are we now from a European perspective. Central Eastern Europe, how concerned are you, Minister, that within Europe's own backyard that there is a problem that perhaps is not fully been taken care of yet, which could still come back and bite us? Four big topics. I don't know how much time you've got, but I'll let you bite at those.
Okay. On the issue of the global regulator and how centric should the system be, I'm personally more in favor of a concentric system where you have different circles. Why is that? Because I believe that we should put in place a system that will work, that will be efficient, not one that will satisfy either the ego or the talent of a grand designer. So my belief is that it should be rooted as close to the ground as possible, as close to the players as possible, but equally we must have a set of rules, a set of general principles, the one that will matter most, that are agreed upon and that are to which everybody is committed, all supervisors around. Equally, there should be a sufficient degree of supervision and coordination so that in case of disagreement about the definition, about the enforcement, about the priority, then that coordination circle can actually determine, in the general interest of all players, what is actually the right definition, what is the ranking of priorities, so that we don't fall back into the trap of this arbitrage for my own backyard because I want to protect my forum. I know it's a complicated system, but clearly there's so many bright brains around this construction that if they can each forget a little bit about their respective interest, we should be able to design a system that works. But my primary concern is that we build something that actually works. I'll give you an example. For instance, on the definition of equity, of core equity for banks. Even within Europe, where we have regulations, where we have directives, where we have the set of rules, the definitions will differ from one country to the other. And we saw that very clearly when, for instance, I was involved in the, together with my Belgium and Luxembourg colleague, when we were involved in the restructuring, reorganization of Dexia, which was a tri-national bank, if you will. The definition of Tier 1 equity was not the same. And that's only a small example, and I'm sure that there are many around, especially if you go beyond Europe. I mean, within Europe we're making this massive effort to sort of all point in the same direction, but clearly that's That's a big issue. Now, is the G20 the appropriate forum to deal with global imbalances? The two areas where clearly a lot of attention will have to be paid in the future. It's that of the global imbalances, if we want to think about an exit strategy, and it's clearly, as part of the process of the global imbalances, the issue of currencies. Those have not been really touched on in the last G20 communique, simply because it was not the priority and the urgency of the moment. But we will have to come back to that. Now, whether it is the G20, an evolution of the G20, I don't know. But it has to group all major players. And we cannot live on the definition of major player as understood 20, 10, or even 5 years ago. The world has changed. And the voices of the world are different. So we need to account for that, and we need to be as encompassing as we can if we want the thing to work. Again, I'm totally obsessed with implementation, efficiency, and making sure that it's going to fly. Where are we between the systemic aspect and those that have not followed the rules? I don't know whether we are sufficiently advanced, but I'm sure that we will at some stage get there, because any event of that nature needs a post-mortem. There's some of it being done at the moment so that we can actually, redress the ship and make sure that it goes in the right direction. But I hope soon enough we have that analysis of what went wrong, why it went wrong, who was asleep at the wheel, and my intuition, call it feminine or not, but my intuition is that many of all the players that should have been concerned, that should have raised their hands, either did not, or did to a limited extent because it was within their own perimeter and they did not take sort of the bird-eye view of what was happening. But just like in the Enron case, where we eventually found out that the board, the auditors, the lawyers, the supervisors, that people didn't see. But we need to understand why and who actually did not. Now, Central and Eastern Europe, I would caution you against the sort of easy sort of encompassing word, Central and Eastern Europe. And I can see you nodding, you know exactly where I'm coming from. Not all Central and Eastern European countries are in the same basket at all. And if you analyze the current situation of, say, Poland or the Czech Republic, compare it with Hungary or Bulgaria, it is not the same. And obviously on the top of that, you need to think about the Baltic states. So beware of generalizing Central Eastern Europe. I don't think that's the right approach. I think we need to think about countries that are in a difficult financial situation. There are countries, as you know, that are currently having the benefit of IMF and European support. That is the case for Hungary. That is the case for Romania. And we have in place at the IMF, clearly with a tripling of its resources, and within the European Union with a very large increase of the facility that we can use for outside Eurozone members and vicinity states. We have in place tools and funds to actually support and rescue those states that would be encountering great difficulties. So it's a process. It's one where clearly everybody has to play its role, including local governments. I'm here thinking about the vicinity rather than inside the European Union. But we are clearly on alert, and we are very vigilant to make sure that we act, if and when necessary, on a joint basis with the IMF.